My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to teach and put it all in context. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. I used to dread these big Fed days like today. I was always trying to game what was said, what would be said, what wasn't said, what changed from last time, what would be different. It drove me nuts! Over the many years of observing these meetings, though, like we had today, where the Fed raised interest rates by another 25 basis points, taking them to the highest level in 22 years, I realized that trying to parse the Fed's moves is a mug's game. There are so many people who follow this stuff better than I do, who know the nuance of every word, that I think it's a much better idea to use the volatility created by these meetings and buy the stocks to fit the overriding themes we've seen so far this earnings season. It's fresh, it's good. Of course, we didn't get that much volatility today. Dow gained 82 points, the longest win streak since 1987. Uh-oh, that was a bad year. While the S&P dipped 0.02%, and NASDAQ declined 0.12%. But my advice stands. So let's do this. Let me give you the 10 dominant themes we've seen so far this earnings season, the best ways to play them. That way you can make some hay with these longer-term stories rather than just endlessly fretting about whether Jay Powell meant to say what he did. Data-dependent, meeting by meeting, lower inflation. Yeah, sure, you got it. The number one theme this earnings season is the use of generative AI to make better decisions and to save money for companies, not to mention time. So far, that's what we know AI can do for us, not more than that. We know Alphabet and Microsoft just gave us some very positive words about AI, but there were plenty of concerns about the cost of ramping this revolutionary technology. That's a big reason why Microsoft stock got hammered today, although I like it at this level. Too much cost ahead of the potential gains. That said, it's down enough to buy. This evening, ServiceNow said it's making more use of AI than anyone. They call it a once-in-50-year technology change. CEO Bill McDermott announced tonight that in September, the company will release a new version of the platform with these new AI tools, which could drive, he says, a 60 to 100% increase in contract value in some customers, and that's not in the company's robust guide that he gave us tonight. By the way, of course, both Adobe and Salesforce have operated products that I am told are being really, really well received. Now, there's one common theme behind all of them, though. They need NVIDIA's ultra-high-end graphics cards to power this stuff. ServiceNow made that point tonight. It's the simplest way to play the AI theme, and ServiceNow is probably the easiest stock to plug and play because McDermott emphasized those remarks this very evening. We also got a good quarter from Meta this evening. That's formerly known as Facebook, of course. It was helped by AI. Meta had great cash flow, strong ad revenue, better than expected engagement. I'll tell you something. Every region beat. CEO Mark Zuckerberg was incredibly enthusiastic about the scale of the opportunity in AI. One of the few areas where he's spending more rather than a lot less. AI winner again. Second most dominant theme, housing. No matter what the Fed does, it doesn't seem to be able to send down the price of housing, which is up 40% in 4 years. Come on. We just got a report from Pulte Group that indicates rate hikes just aren't knocking down home prices because most mortgage holders are paying much lower interest, and they don't want to surrender those low rates by selling their homes. Jay Powell talked about some credit issues among consumers, but the demand for homes vastly exceeds the existing supply, and that's not changing. In fact, despite higher mortgage rates, it's actually getting worse. So what do? I suggest buy Lennar and Toll, best housing place. Third is margin expansion. This earnings season, there's been a recognition that some companies have such powerful brands to the point where they've been able to maintain higher price points even as their raw costs have come down, and in some cases come down a lot. So far, we've seen these higher price points being preserved by PepsiCo and Unilever, but not by Kimberly-Clark. Not enough mass, not enough scale. I think Procter & Gamble's reports Friday, Travel Trust name, might be the next stock that can keep its prices up while raw costs have declined because of their monster worldwide business. By the way, Chipotle talked after close tonight. They're clearly a member of the club, but they're not going to get a lot of credit for it because of a light sales result and conservative third-quarter guide. More on Chipotle later when we speak with management. Fourth is the return of enterprise software as a favored sector of the stock market. From here to here. Now, I pointed out many times that this group is on fire and could have more room to run. My favorites, MongoDB, Confluent, Monday.com, and Cloudflare. Among the smaller operators, Salesforce and Adobe, among the big ones. Before the Fed started tightening, these stocks were all market darlings with great growth. They've now pivoted to strong growth with profitability, which is what Wall Street wants. Fifth theme, travel and leisure remains incredibly strong post-COVID. The long on money, short on time thesis is still very much in play. The obvious ones are still the cruise lines, Carnival, Royal Caribbean, Norwegian Cruise. I like the airlines, notably Delta, Marriott, and Airbnb. That last one is so good. Work for destinations worldwide. Please, let's not forget, especially after this morning, Boeing, which just reported an astonishingly good quarter. By the way, how about GE, which had some profit taking, but is now on course to join Boeing with a multi-year move thanks to the enduring bull market in aerospace. You know what? After speaking with Dave Calhoun, the CEO of Boeing, this morning when I spoke to him with Squawk on the Street, I think Boeing stock has much, much further to run than it has so far. 6, there's been no let-up in the need for cybersecurity. Even the second-rate players like Tenable are putting up decent numbers, not recommending that one. My favorites are CrowdStrike and especially Palo Alto Networks because it's got the soup-to-nuts superior offering. Palo Alto is a huge favorite in the charitable trust, as all investing club members know. 7th, infrastructure doesn't quit. Spending of all stripes because of all that Fed stimulus. When we're talking about climate-driven investments in alternative energy, I think you got to play with Tesla. And now, an industrial that I've not been able to talk enough about, which is Eaton. When we're talking road building, I like Caterpillar, and of course, new structures is Nucor, the steel company. 8th, as much as I dislike the Chinese government, I like that the Chinese economy, it's still one more attempt to come back, and that means you can buy Starbucks and Wynn Resorts, the casino company, as well as own it, don't trade at Apple. I think the Chinese Communist Party is now doing everything it can to make the economy stronger. It has not succeeded yet, but that just means it's going to keep trying. American companies with big China exposure work in that environment. 9th, there's a supply chain normalization that's finally taking place, allowing many companies to deliver good numbers after a real rough time because of COVID. Boeing talked about how the supply chain has gotten better. Stanley Black & Decker, a charitable trust name, has said that supply chains have improved. Same goes for Coca-Cola and PepsiCo. The multi-year logistics nightmare is over. 10th, I like the trade-down theme. Both Sam's Club, owned by Walmart, and Costco, what a horse, have experienced robust sales as consumers pull in their horns. Now, we're going to hear more on this issue when we speak to supermarket giant Kroger later today. Why am I so confident about all these particular groups? Because the information is on time, it's current, it's now. We know how the market's reacting to these issues in real time. That's what I like. Now, of course, nascent themes, organized labor, stronger than it used to be. Markets clearly thinks the Teamsters got the better of UPS. I think too soon to jump to any conclusions there, although I do worry about a UAW strike, the empowerment of labor. Good for union members, bad for you if you're a shareholder. On the flip side, aren't the banks down enough that they make sense? I think this topic is not overarching. I don't want to pick something that can have 3 days of straight up and then I got to tell you it's fully valued. How about the resurgence of IPOs? Not yet. Bottom line, I like my approach. It's clinical, it's unemotional, it's empirical. Remember the theme this week. Keep it simple. Those 10 categories are as simple as they get. Let's go to Joe in New Jersey. Joe!
Hello, Mr. Cramer. I follow the fundamentals that you talk about to a T, and now I can retire early. Thank you so much.
There you go. There you go. That's what the show's about. Let's go.
My question is on Energy Transfer Limited Partners. It has a high dividend, a low PE. Is it a buy? And
the answer is yes. The answer is yes. Now, I have been reluctant for a while, but I changed my mind. Why? Because we do have so much demand for pipes, and I have to admit the yield's good, and Kelsey Warren has put together, after many years, a very decent agglomeration of pipes that does work. Dave in South Carolina. Dave.
Jimmy Chill, how are you, sir?
The Chill man is in the house. What's happening?
Love it. Jim, I've been riding this stock for a little bit. It's come down off its highs the last couple months by about $20. I want to know if I should keep riding this pony or I should look for another thoroughbred in the same sector. My stock is AMD.
All right, AMD is having what I call one of these consolidation phases. I think the PC market is bottomed. I think they're doing well in the data center. People worried about whether there's too many data centers. I think they'll be fine. AMD, we heard the other day from Taiwan Semi that demand is very good for their chips. I'm sticking with it. My travel trust, I think you should stick with it too. All right, remember the theme this week. It's keep it simple. These 10 categories are as simple as they get. Write them down. They will make you money, I believe, in this choppy environment. It's been a good run, but now we got to find out what's going to happen. On Mad Money tonight, Chipotle reported after the bell, and I'm taking a bite of the report with the company stock brass. And what the heck happened to Spotify stock yesterday? Plunging 14% after earnings. I'm digging into the details because I know you care about this stock. And I'm going to share with you what I know about the music streaming service. It's pretty enlightening. And look, to get a read on the state of the consumer, then look no further than Kroger. I'm seeing what the grocery kingpin is seeing with the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.